I'm Catherine McQueen and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. Today we're focused on Lamb Weston Holdings, one of the world's leading suppliers of frozen potato and sweet potato products to restaurants and retailers. This stock rose 30.6% over the past 12 months, and one of the directors, William Jurgensen, just increased his position in the company by 13%, around all-time highs, taking his holding to just under 150,000 shares worth $13.25 million. His purchase on the 8th of January 2020 was for 18,000 shares at a price of $92.01, costing him $1.65 million. Let's see if we can work out why he topped up his holdings. Lamb Weston was founded 70 years ago and has grown into an international business with products and operations in over 100 countries around the world. The company is based in Idaho, the potato capital of the world, and employs 7,600 people globally. 52.2% of its sales are focused globally, 30.8% on North American food services, 13.3% on retail, and the final 3.7% on vegetable and dairy operations. The firm has a market cap of $13.22 billion, $3.7 billion in revenue, net income of $488 million, and an EBITDA of $876 million. The company's shares received a boost after second quarter fiscal 2020 results, with the top and the bottom line surpassing the consensus estimates and rising year on year. Top-line growth was supported by robust volumes and price mix. Moreover, the BSW buyout earlier in the year contributed to the bottom line and aided volume growth. In terms of profitability, in 2019, Lamb Weston had a return on assets of 14.36%, a profit margin of 12.64%, and return on equity of 247%. In valuation terms, the firm's price-to-earnings ratio is 26.38, which suggests the stock's valuation is very expensive. The forward price-to-earnings ratio of 24.39 also suggests it's an expensive stock. Lamb Weston also has a high PEG ratio, which compensates the price to earnings for growth and indicates an expensive valuation of the company. In growth terms, earnings per share grew by 11% over the past year. This has been a consistent area of success for the firm over the past 5 years, averaging 13.92% for the period. Based on estimates for the next 2 years, Lamb Weston earnings per share will grow 7.34% on average per year. Revenue is an area of strength for the firm, growing by 9.16% in 2019, having averaged 6.13% for the previous 5 years. Health-wise, the firm looks to be in a fairly stable condition. Its quick ratio suggests that the firm is better placed than most within its sector in meeting its short-term obligations. Saying that, the firm does have one of the worst debt-to-equity ratios in its industry. As witnessed in recent earnings numbers, Lamb Weston is gaining from volume growth and solid pricing moves. These trends and a favourable operating environment can be seen as bullish for 2020 trading. Looking to the technicals, both the long and short-term trends are positive. This is a very liquid stock with an average volume of over 1 million shares traded daily and is trading at the top of its 52-week range. Long-term moving averages are tracking price action higher following a golden cross heading into Q4, while momentum indicators are trending just below overbought territory. The stock is currently showing a bull flag pattern, which occurs when prices pull back slightly after a strong rise up. It's at this point that Jurgensen got into the market for his latest purchases. Bullish flag formations generally indicate upcoming moves higher, which tallies with Wall Street forecasts, which are signaling a move to a range between $100 and $105. Nevertheless, as seen looking at the fundamentals, this stock does seem overvalued, but that does not mean it won't go higher. It does, however, mean that we insist that you do your own due diligence before making any investment decisions. That's all we have time for now. See you next week.